What is up, everybody? Welcome back to the channel. Just Dhillon here. And as I promised, I am live again. I scheduled it this time. And in today's video, we're going to be talking about creative financing. How you guys can, there's different ways to buy a house here in Canada. So there's not only, so just to put some context into today's topic, today, I asked on my Instagram what kind of topics did you guys want me to cover, and as you can see here, I got a few answers. They wanted to me to cover real estate wholesaling in Toronto, private money lenders, creative ways for financing rental properties in Winnipeg, what lenders are the best, how to buy a property and turn it into an asset. So I'm going to be answering those questions and any questions that you guys give me and you guys bring forward. But in today's video, the main topic which I want to talk about before taking any questions is creative ways of financing real estate. And if you're just joining, welcome to the live. In this video, I'm going to be talking about, as you guys might have now read the title, creative ways of financing real estate. So I don't know, most of you guys know the direct way of just saving up money and then putting a down payment on a property, whether that's 5%, 10%, 20%. Anyone that's just joining, welcome. But if we can get those likes going, I really appreciate that. But I made some notes here, and I'm gonna talk about creative ways, creative financing ways that you guys can basically buy a property and not solely depend on 5%, 10%, or 20% down. So if you guys are watching this, I really appreciate that. If you guys could just like this live stream, that really helps me a lot to reach out to more people. So let's start it out after you guys smash the like button with, I made some notes. We're talking about creative financing. So if you're just joining, we're talking about creative financing. So the first way, as you guys might know, the easiest way to buy a property and the way that a lot of people know how to buy a property is, thank you, Hermol, thank you. And I'm gonna be taking all of you guys' questions. If you guys have any questions, leave them in the comments down below and I'll answer your questions. But I made some notes before coming to this live, so I want to talk about and I want to give you guys value on this. And if you guys are just joining, on my Instagram live, I talked about if you guys wanted me to talk about certain topics. So I got a few answers there, and so yeah, let's get it started. So what's the way that you guys know how to buy a property? The easiest and most common way on how you guys know how to buy a property is where you see a property, you go and look at the property, and then you tell the realtor that yes, I want to buy that property, and then you either put 5% down, 10% down, 20% down, and then you have to have Rahul. How's it going, Rahul? But you have to have that money saved up. Whether if let's say if you're buying a property in Toronto, if in Brampton, let's say average house price in Brampton is $1 million. So if we do 5% of that, that's $50,000. 10%, $100,000. You guys know what I'm saying. But there are other ways where you don't need to rely solely on the down payment, that the money that you saved up, right? So let's talk about some of the ways that you can buy property and you don't need to have that money saved up. You can either borrow it, or there's other creative ways of financing purchasing properties, right? So they're right here. I've noted 7 of those creative ways that I want to talk to you guys today. Thank you, Rishabh, for commenting in this live stream, and anyone that's liking this live stream. That really helps me out a lot, as you guys know. But the first is vendor financing. What is vendor financing? right over here, vendor financing or VTB. What is VTB? VTB is vendor take back mortgage. Okay. Om, how's it going? Hello. So vendor financing or seller financing, like they call it in the US, is where you actually buy a property, and if you don't have the down payment, and actually the seller of the property is willing, is has a lot of equity in the property, can actually provide you a mortgage for the property himself. So you don't even have to go through the bank. That is what it's called, vendor financing or vendor take back mortgage, VTB. Uh, Truth be said, they're not very common, but there are out there. If you're looking for buying a property and you don't have the down payment saved up, there's ways on how sellers can actually finance you the either the down payment or give you the money for the mortgage, right? So how can this be possible? The only way that a seller of a property can give you a mortgage for that property is if the seller has almost zero to none mortgage on that property. Meaning that if a property is worth, let's say for easy numbers, $500,000, the seller has maybe $50,000 as a mortgage in that property, and $450,000 has already been paid off. So if the seller is really motivated to sell, what he can do is he can actually give you a mortgage on that property, and you guys don't even need to go through the bank, right? So it's a very creative way of again buying a property if you don't have the down payment, right? um, Thank you, Rahul, I appreciate it. So that is the first way of how you guys can buy a property, and you guys don't need to have the money saved up, whether that's 5%, 10%, 20% down. With vendor financing or vendor take back mortgage, which they call it here in Canada, you don't need to depend on the bank. All you do is negotiate with the seller directly. So the seller can give you the mortgage, and then you guys can just make those terms within that. Okay. So now the second is right here, private loan through Rrsps. Okay. So this is another great way of how real estate investors buy properties. I mean, you guys might have seen it. There's a lot of real estate investors or people that you might know, that you might follow, that are buying 5, 10, 20 properties even a month or even a year. Even a year, right? So how do they do that? How are they able to buy so many properties without their own money, right? I mean, let's say I have $100,000 saved up. With $100,000 here in Winnipeg, thank you, Varun. I really appreciate it. With $100,000 here in Winnipeg, maybe you can buy 2 properties. Put 50,000. I'm gonna talk about about Rrsps. But let's say if you have $100,000 here saved up in Winnipeg, you can buy maybe maximum 2 properties. You can put $50,000 down payment on 2 properties, and that's it. All that you can do is just buy 2 properties with $100,000. So now, what do the smart real estate investors do? What the smart real estate investors do is they work with what's called OPM. What is OPM? It's other people's money. So how do they work with other people's money is through private loans through an RRSP. So if you guys don't know what an RRSP here, or if you guys are still in India and are looking to come to Canada, or if you guys are in Canada already, or whichever country you are, RRSPs are Registered Retirement Savings Plan, okay? Registered Retirement Savings Plan is a great way to lower your earned income, okay? So let's say you're in this particular year, let's say in 2021, I earned $150,000. So the government of Canada is going to give you a contribution limit. Let's say, for example, $15,000. Thank you, Zach. Thank you. Appreciate it. The government of Canada is going to give you a contribution limit to your RRSPs. So if let's say $15,000 is your contribution limit for 2021, what you do is you want to maximize that contribution limit. So then let's say I put $15,000 and my income is 150. Now my tax is going to be based on $135,000, right? Yeah, I'm going to talk about that as well, Shivam. Just give me 1 second. So the second way, so now that you guys know what RRSPs are, which is a registered retirement savings plan, the second way of how real estate investors can buy a lot of property in a small span of time is through private loans through RRSPs. So if you were to take out, let's say I have that $15,000 in an RRSP and I want to take out that money, let's say I really need it that year. If you were to take out that money here in Canada, that money that you take out for that year, that is taxable money. Okay, so you will have to pay taxes if you take out money out of an RRSP. Okay, so not a lot of people know that. So I'm telling you guys, if you're taking money out of an RRSP, a registered retirement savings plan, you are paying taxes for that year. Okay, so what do the savvy real estate investors do? Instead of taking out their RRSP and having to pay taxes to the government, which no one really likes paying money to the government, they just transfer that money and invest it into real estate. And through what? It's through a company called, one of the companies called Olympia Trust. Okay, if you guys don't know that, note it down. Olympia Trust. So Olympia Trust is a company that lets you work with real estate investors, and then you take the money that you have sitting in an RRSP and then you just take that money and invest it into real estate. So if you're moving your money from an RRSP to a real estate investment through Olympia Trust, that is non-taxable money because you're buying an asset. Okay, so that's another great way of how real estate investors scale up their real estate portfolio and buy more and more and more properties. And that is the second way that I talked about, which is a private loan through RRSPs. Okay, so the third way on how you guys can buy properties without even having the down payment saved up of 5, 10%, 20% down is through, number 3 is joint ventures or private loans. So joint ventures is, for example, like the people that are watching here, I have a deal. I'm going to talk about that, Harmol. So just stay tuned. I have 3-4 more ways on how you guys can get financing, and then we'll take on your questions. So private loans or joint ventures is another really popular way of how real estate investors grow their portfolios. Okay, Rahul, I'll do that. I'll make sure to keep those. But okay, keeping to the point, private loans or joint venture partnerships are another great way of how real estate investors basically expand their portfolio. It's a great way to grow your portfolio on a 10-20 times basis. So how does joint ventures or private loans work? Let's say I am a real estate investor, and anyone who's watching here wants to partner up with me, right? So I have a deal, I have a house that's worth $350,000, but I don't have the down payment because I have other properties or other projects that I'm working on, right? So what do I do? You guys don't have the experience, but you guys have the money saved up. So how does it work is, you and me go into a joint venture partnership. You bring the money, I bring the deal. So it's a win-win situation for both of you, for both of us, because you bring the money and you don't have the experience. I have the experience and I have the deal. So this way we partner up in this joint venture partnership, and we either do a 50-50 split, a 60-40 split, whatever we work out. And this way, we go into the partnership together. You bring the money, I bring the deal and the expertise. So it's a win-win situation for both of us. Okay, so that's another great way of how real estate investors grow their portfolio, how you guys can see real estate investors buying 15, 20, 30 properties in 1 year is with working with capital partners or joint venture partners, as I like to say. Okay, guys, If you're finding this live stream really valuable, the only thing that I ask from you guys is to smash that like button and subscribe if you haven't by now. Okay, so let's go to the fourth way of getting financing to buy a house if you don't have the down payment saved up, right? So the fourth way of buying a house if you don't have the down payment saved up is what you call a Heloc. Uh, no, I'm not gonna delete this. I'll save this. Okay, that was a technical issue that I had yesterday. I'm gonna save this. But the fourth way to buy a house if you don't have the down payment saved up is what you call a Heloc, which is another way here in Canada and in the United States that a lot of thank you, Om, that a lot of real estate investors buy property if they don't have the down payment saved up. So now you might be thinking, what is an Heloc? What is a Heloc? So Heloc is a home equity line of credit. A home equity line of credit is basically if you have a in simple terms, let's say you have a property and your property is worth $500,000 and you've lived in the property for, let's say, 5 or 10 years. Now after 5 or 10 years, your mortgage, your monthly EMI is not going to be the same, so it's going to be lower, right? So now after 10 years, let's say you bought the property for $500,000. Now after 10 years, maybe your property is worth $750,000 and your mortgage is $250,000. So this gap that you guys can see here, this is $500,000, right? If your property now is worth 750 and your mortgage is $250,000, this gap right here, this $500,000, it's what you call equity in your house, which is money that you have sitting in your house that you're not using. So what real estate investors do is they get access to that money. And how do they get access to that money? Is by basically going through a Heloc. A Heloc is basically you can borrow up against your house for a maximum of 80% of the value of your house or 80% loan to value. Okay, so if the house is worth $750,000 and your mortgage is $250,000, you can borrow the amount, the difference between the 250 to the 750, the 80%. So they take out that difference and then it's a lump sum in cash that you get from the bank at the same rate that you have right now. Whatever, like right now, interest rates in Canada might be, right now they're pretty low. That's why a lot of real estate investors are buying a lot of properties, and even retail investors are buying a lot of properties. So right now, the what do you call, the interest rates are anywhere between 1.5, 2%, 2.1%. On commercial properties, they're a bit higher, but on residential properties, the interest rates right now are pretty low. Okay, so that is it. That is another way on how you guys can get can buy properties, and that is called Heloc, which is Heloc as in HELOC. If you guys want to research it after, which is called the home equity line of credit. So I have 3 more points to go on how you guys can also buy properties. And if you guys want me to, I can even do more detailed videos later if you guys are interested. So the 5th way on how you guys can buy property without having the down payment saved up is, in this case, is hard money lenders. Okay, what are hard money lenders? So here in Canada, there's different type of lenders. Okay, there's type A lenders, type B lenders, type C lenders, even shark lenders. So type A lenders are like the big 5 banks here in Canada. The big 5 banks are, as you guys know, TD, RBC, BMO, all those. Okay. Type B lenders are credit unions. So Steinbach Credit Union, all the different types of SCU Credit Union, all the different types of credit unions that you have in different provinces. In Winnipeg, there's different types of credit union. In Ontario, there's different types of credit unions. So those are different types of credit unions. Then there's type C lenders, which can be private lenders. Like, let's say I have $500,000 and you have a deal. I can lend you that money and I can ask 8 to 12% on my money. So that's another way. And then you have private money lenders or shark lenders, which it's another way of buying property if you really have a great deal. So what's the only disadvantage? Well, what is one of the biggest disadvantages of using hard money lenders is the interest rate that they ask for the money that they lend you is very high. So when I say very high, shark or money or hard money lenders can ask you maybe 12 to 15 to 18% on their money, right? So when you're buying a property and you don't have the down payment, you can use hard money lenders, but I'm gonna tell you guys, always run your numbers, always make sure that the property that you're buying is a good deal, and that maybe after you can refinance the money, or that maybe in 2 to 3, or maybe then in 2 to 3 years, you know that the appreciation is going to be so high that paying that amount of interest in that property makes sense for you, right? So that's the biggest drawback with hard money lenders, is that they'll give you the money. They don't even care for your credit score. They don't even care how much down deposit are you putting. But the drawback is hard money lenders have a high interest rate that they demand of letting their money. Okay. So another way on how you guys can get money, this before it used to be possible to pull out money from this particular thing that I'm going to be talking about and put it as a down payment. It's not anymore, but you can use this money and maybe do renovations on the house to increase the value of your house. So the fifth way, I don't know which number I am right now, but another way is pulling out money off your either business or credit lines. Okay. So another way is, when we come to Canada, all that we know is you need to have a checkings account and you need to have a savings account. But guys, if you lived in Canada for long enough, you built up a good credit score, you will have a good relationship with the bank, meaning that if you have a good credit score, that means that you're in good terms with the bank. The bank knows that you pay your money on time, whether that's your phone bill, whether that's your bus pass, whether that's utility bills, any kind of bills. That is reflected on your credit score. So if you pay those on time, that means to the bank that you're a good person to lend money to, right? So personal lines of credit, it's another way that you want to go to the bank and tell them that I want to open a personal line of credit unsecured. What does unsecured mean? That it's not tied to any of your assets. So if you have a house, if you have a car, it's not tied to any of that. It's just based on your credit score and how good of a basically of a prospect you are to pay the money back. So personal lines of credits and business lines of credits are another great way that you can use $10,000 to $15,000 and use it to renovate your house, use it to maybe invest in the stock market. I personally have pulled out money from the personal line of credit to maybe buy a house, buy a car cash, so I don't have to deal with financing rates from the car dealerships. So that's another way that you guys can pull out money from the bank and not have the down payment saved up, right? And the final and last one is number seven is cash out refinance. So there's a big confusion between Helocs and cash out refinance or cash out refinances. Cash out refinances is again a great way to take out money. You can only do Helocs or cash out refinances if you have a house, that is, or if you have an investment property, right? But the other ways that I talked about, you don't need to have a house or an investment property. Okay, so cash out refinance is where you have a house, let's say that's worth $500,000, and the only mortgage that you have left on your house is, let's say, $50,000. So what you do with the bank is So if you only have $50,000 left and you have 450 and your house is worth $500,000, the difference is obviously $450,000. So what you tell the bank is, I want to cash out refinance, and they give you $450,000. You pay the balance that you have, the $50,000. So now you own the house basically free and clear. You own the house with no debt. So now you have in the bank $400,000, right? Give me 1 second. Cash out, basically, cash out refinance is where you buy out the bank. Okay. So again, if your house is worth $1,000,000 and you only have $100,000 in debt, that you go to the bank, you say, I want to cash out refinance. You take out the $900,000, you pay the $100,000 in debt that you have with the bank. So now you have $800,000. So with the $800,000, you can go out and buy more property, right? So that's another great way of how you guys can buy property and continue to buy property even if you don't have the down payment saved up, whether that's 5%, whether that's 10%, 20%. Those are some really creative ways on how you guys can basically go out there and buy property without having the money 5, 10, 20% down saved up. Okay, so just to give you guys a quick recap, the first one, which I have my notes, every time that I do a live stream, I'm prepared. I want to give as much value and as much information in one live stream that I can. So you guys, if you're taking time out of your day to hear what I gotta say, you get the most amount of value. Okay, and if you guys get value, all that I ask for is that you subscribe to this channel, you share this channel with your friends, and that you like this live stream. That's all that I'm asking. Okay, so quick summary of how you can buy a house without even having to save, without having your 5, 10%, 20% down payment saved up. The first one was vendor financing, or VTV, which is vendor take back mortgage. The second one was private loans through Rrsps, and the company that I said is Olympia Trust in Canada. I think they also operate in the US, so that's another way. Number 3 is private loans, which is another way of how real estate investors, appreciated Shubham, of how real estate investors grow their portfolios and really are able to scale on a bigger basis. So that's private loans, joint venture partnerships. The fourth way is going with Helocs. I'm going to answer those questions. I'm just going to finish whatever I had to say, and then you guys leave me all those questions. Then we'll go into questions, and then I'm going to answer all your questions, whatever you have to say. Okay. The fourth way is go with Helocs, which is home equity lines of credit, which you borrow from the house or the investment property that you already have, and then you just borrow against the equity that you have built out throughout the years. Fifth way is pulling out of your business and personal lines of credit. That is for renovation money. That is if you want to pull out to buy a house, to buy a car cash. That is if you want to pull out that money and invest into the stock market, because personal line and business lines of credit usually are anywhere from, I would say, 6% to 9% on your money. Okay. So sixth way is hard money lenders. Again, hard money lenders, a great way if you don't have the down payment saved up, that you can go with hard money lenders, and then they can loan you the money. Again, it is usually at a high interest rate, but then the positive is you are able to buy a property, but the drawbacks are a high interest rate. But again, if you're buying a good property with good numbers, that you have run the numbers and you guys are very confident on buying that property, I think it still makes sense. And then the last and seventh creative way of buying properties is cash out refinance, which is where you have so much equity in your house. 1 second. So cash out refinance is where you have so much money in your house, or that you have such a lower mortgage that you're able to buy out the bank, and then all the cash that you have, you can use that cash and buy more properties. Okay, so that's 30 minutes on the clock. uh, that was what I had to say about creative financing. Now I'm going to take your questions. I know I've said a lot of information, a lot of value in 30 minutes. So now is the time that if you guys have any questions, leave them in the comments right now. I'm going to go through the comments. I'm going to scroll to the up. I'm going to scroll up and I'm going to see what you guys were saying. And I'm going to answer all your questions right now. Any questions, doubts, this is the best time to ask me because I'm here for you guys and I want to interact with you guys. So I've said 7 ways, 7 creative ways on how you guys can buy property without having your money saved up. So now it's your time. If you guys have any questions of the things that I was saying, now is the time to ask those. Now I'm going to scroll down and see your questions. Okay, let's say, okay, so Harmol was saying in VTV, it's not VTP, it's VTV, vendor take back, VTB. Okay, VTV, seller's liability will not increase. The seller, yes, has some type of liability, but the VTB is where the seller is giving you the mortgage to buy the property. But why is he giving you that mortgage? Is because maybe they want monthly installments and they don't want one lump sum already with the sale of the property. But obviously they're gonna secure their mortgage with against your personal assets or your personal net worth. So at the end of the day, it still makes sense for them. They're giving you 75 or 80 or 90% loan to value against your property. So it's still making sense for them. Okay, so that was VTV. All right. Om was saying, please give information on how to increase your network for joint ventures. Okay, a great way to increase your network for joint ventures and increase your real estate portfolio, I would say is one, get as much knowledge as you can. Watching these videos is great. Watching other real estate content creators is also great. And then going into the market, going into networking events, talking to people, and actually jumping into your first deal. Save up money, increase your income, lower your expenses, go into the first deal. And then I would say another great way of getting joint venture deals or joint venture partnerships is being on social media. Okay, you guys got to use social media as a business. That this business is going to help you reach out to more people and connect with more people and help out more people. Okay, that's another tip for you guys. So more questions. So mostly these steps will work only when you have PR. No, vendor financing, you don't need to have a PR. Private loans through Rrsps, you don't need to have a PR. Private loans through joint venture partnerships, you don't need to have a PR. Helocs, you don't need to have a PR. Pulling out money out of your business, your credit lines, you don't need to have a PR. Hard money lenders, again, you don't have need to have a PR. None of those strategies, you need to have a PR to do those. Okay. So let's see. Om is saying, is there any way to get your mentorship? Right now, Om, I'm just working on my own stuff, but I am working on something that if you guys were really interested, I am considering that. But right now, I'm working on my own deals. I'm working on my own stuff, but definitely in the future, this is something that I'm working on. And as we grow this channel and I bring more and more value to you guys, because my main mission with this channel is to give you guys financial education, give as much value as I can to you guys, so you guys can also start investing in real estate, growing your net worth, And that is what we came to Canada for, or that is what we are here in Canada for, is to actually educate ourselves, grow our financial knowledge, grow our assets, and then live a comfortable life. Okay. So Harish is saying, I'm from India. Can you hire me to work with you? Right now, I'm not hiring anyone. I'm just providing as much value as I can for you guys. Shivam, appreciate it. How bank decides the rates? So bank, that's a really microeconomics question, but it really depends on many things: inflation, supply and demand, what kind of economic situation we're in right now, but the prime rate that the government sets. So I think right now the prime rate in Canada is 3.95%, if I'm not mistaken. But yeah, that's another one way. But how the Bank of Canada decides rates is a very macroeconomic question, but I just gave you some few pointers there. Do you know anything about the Regina real estate market? Yes, I've been to Regina many times. I would say 4 to 5 times. The Regina market and the Winnipeg market are very similar. Saskatchewan and Manitoba are really heavily based on agriculture. So their markets are very similar. The average home price, even in Regina, is around $350,000 to $330,000. So I would say very similar. Okay. So Kamrat is saying, how do we buy the property through someone's RRSP? Like we use their RSP, pay the down payment, but how we would return it? Okay, so you buy that. So one way on how you can buy the a property through someone's RRSP is through the company that I said, Olympia Trust. So yes, you can use their money to put the down payment and offer them an interest every month. So interest on their money that they're lending you, whether that's 8%, 10%, 11%, 6%, 7%. You just gotta negotiate that with whoever is lending you that money. Okay, that's how you pay it back. Or if you're planning to have it as a rental and then refinance the money, once you get the money back from the bank, you pay them back. Or if you're planning on flipping the property, that's how you do it. Okay, more questions. Savinder Singh is saying, what do you prefer more, flipping or long-term rental? So in the past, mostly what I've done is flipping and wholesaling. Oh, sorry. In the past, what I've done mostly is rentals and wholesaling. But right now, as I'm trying to expand, I'm looking into more flip opportunities. But again, it depends. Flipping, it depends again, guys, on your goals. If you guys want long-term wealth, flip will give you the money, right? So flip in 2 to 3 months will give you $20,000, $30,000, $40,000, right? But you got to do something with that chunk of money, right? So, and rentals will give you long-term wealth, or will build generational wealth. Basically, rentals, they'll give you $200, $300, $400 a month. Depend cash flow depends on where you buy the property and what kind of numbers you're buying the property. But yes, so I think having a good mix of both is a great way. Or if you're having a job, maybe start with buy your first house and house hack. That's the biggest advice that I give everyone. If you don't have a house yet, and you're thinking of buying a house and you have a full-time job, house hack. Or you have a business, house hack. So buy the property, rent out the basement, and or either rent out the rooms, and then you either have a lower mortgage payment or live for free. Okay. Next question is, I'm really loving all those questions. I love to talk about real estate. I love to talk about finance. So I encourage you to even ask more questions, because that's the whole reason I made this channel, to engage with you guys, so you guys know this. Rrsps is saying, what's your all-time favorite, single family homes or commercial? I have not done any commercial properties, so I would say single family homes. Rohit is saying, for cash out option, how bank decide the rate? Again, I've answered that question. Sherinagan is saying flipping or rental. I would say both. I've answered that. Joe Mosher is saying, is it good to buy condos in Winnipeg? I see they're cheap compared to Halifax. What kind of rents can you get? Okay, so is it good to buy condos in Winnipeg? Again, it all depends, Joe, in the numbers of the property. But comparing condos to single family homes, the average appreciation of a single family home detached is much more compared to a condo in Winnipeg. But if you're not able to afford a condo, yes, you can buy sorry, if you're not able to afford a single family home detached, yes, you can buy a condo. But on the condo, just be sure that you know the cost, because there's maintenance fee, like property management fees and maintenance fees and all those kind of stuff. So aside from the mortgage, aside from the interest, aside from the taxes, aside from all of that, there's also those management costs that the company pays, that you have to pay the company. But also, to your question, average rents for a for a one bedroom condo in Winnipeg in a decent area, I would say you can get $1,050 to $1,200. It really depends. I'm just giving you ranges because I don't know what's the kind of finishing inside. Is it furnished, non-furnished, all that kind of stuff. For a two bedroom, you can get anywhere from like 1,200 to like 1,400. So again, a big range, but hopefully you get an idea. Savinder is saying, how long do you personally prefer to keep the property before selling it? So right now, whatever kind of property I have not sold. I'm young, I'm able to afford those payments, and in 20 to 25 years, that is going to pay off. But the only reason I would consider selling a property is either if I really have a good deal, whether if I really come across a great deal, smashing numbers, that I'm like, wow, I really need to get on this deal, and just to get some money, I would sell out one of my properties. So that's how I would do it, and then that's the only reason why I would consider selling the property. But for now, I haven't sold anything. Holding strong. Okay, next question. Qualifications, Sherigan is saying qualifications about a realtor license. You don't need no qualifications. All you need is based on the province that you want to do it in. You just gotta register with the board, and then you gotta pass the exams. And once you have passed the exams, then you can you register with a broker, whether that's Remax, Royal LePage, EXP Realty, which I really like. So stay tuned. There's gonna be some cool announcements that I'm gonna be doing in the future. But yeah, just pass the exams, register with a broker, and that's it. You don't need a degree or anything like that. Most of the realtors, even, or a lot of realtors, are just they just graduated from high school. They're hustling right now. Okay, 15, 20, or 30-year mortgage. I would say go for as long as you can. So from your question, I would say 30-year mortgage. And your next question was at least cash flow to expect from rentals. Again, it really depends from city to city. It really depends from city to city, and what kind of property you're buying, all that kind of stuff. But average, again, this varies a lot. You cannot say one amount in this. Average can be anywhere from like 200 to like 300, like anywhere from 2 to 500. That would be a good number, unless you're doing Airbnb or anything like that. Did you become a millionaire by ARB of real estate investments? So right now I'm not a millionaire, but we're working on it, hustling every day. But yes, so the properties that I have bought have appreciated because I bought them at a great time, and now the real estate market has gone pretty. Now the real estate market is booming here in Canada. So I would say, whenever you're here, don't wait to buy a property. I would say just wait, just buy and wait. That's what I did. Whenever I had the money and I had the qualification and I was pre-approved to get a mortgage, I bought the property and I just waited. So now I'm getting rewarded, right? So buy the property and wait instead of waiting to buy the property. That's the biggest advice that I could say. Rahul is saying, how much for a brand new construction on an average for a decent detached 4 BHK, 2 BHK basement house, and priorities close to schools and daily needs? Okay, so Rahul, for a brand new construction, and I would say you're wanting to live in a decent area. Uh, really good properties, you can buy them $500,000, anywhere from $500,000 to $600,000. You can really buy a great property here in Winnipeg. So that's why the Winnipeg market is booming, is growing, because it's an affordable market. People can get into this market and can basically live, right? It's just the drawbacks basically are the weather, pretty bad weather, -20, -25, but you can get used to it. I mean, you never get used to it. I've been living here for 8 years. You never get used to this bad weather, but you learn to cope with it and to live with it. Just give me 1 second. So if you guys haven't liked the live stream by now, I'd really appreciate it if you could consider liking this live stream, and that really helps me out a lot on reaching to more people, and that really tells the YouTube algorithm that people are liking this content and people are finding it valuable. So for the small rate of a like button, that helps me out a lot. Okay. Rohit, Rohit, sorry, I wanted to know about how banks decide house value for cash out. Yes, so that's a great way. So how do you decide? That's a great question. How do you decide how much can you sell your property for? So the biggest way of how banks decide how much you can sell your property for is through inspections and is through house appraisals. And house appraisals are based on comparables. So comparing apples to apples. So let's say, for example, I have this house that's has three bedrooms upstairs, 2 bedrooms in the basement, and I want to sell. This house. I bought it, let's say, 10 years ago. So the bank is going to look for similar houses in your same street or in your same neighborhood, maybe 1 or 2 streets down, that are also three bedrooms, are also 2 bedrooms in the basement, more or less the same year build, all that kind of stuff. And they're going to look for properties with those same characteristics that were sold in the past 6 months to a year, usually in the past 6 months, and they're going to see how much those properties were sold for. So maybe a similar house in your same street was sold for $450,000, and it's exactly the same as your property. So more or less, the bank is going to appraise your property for $450,000, obviously with approximate estimations. Ryan Kelly is saying, hey sir, just bought our first home in Winnipeg, thinking of a second property in the next year or so. How would I be able to be approved for around 5% down and put first home as a rental? Okay, so Ryan, if you're still watching this, First of all, congratulations on buying your first property here in Winnipeg. That's a great way to just get started. As I said, buy and wait instead of wait to buy. But what I would need to know is, did you put 5% down on the first property that you bought? So if you let me know, then I can answer your question. Rohit is saying current rental that is available near U of M. So there's a lot of properties that are for rent near U of M, whether that's houses, whether that's apartments, a lot of properties that are available, but they're available only if you smash that like button. So once you smash that like button, more properties come available in the market. And that's facts. I'm just speaking facts. So Kamrit is saying wholesale plus student rentals will build really crazy wealth. The board is deadly combo, and if you have extra money, do private lenders and yes, pay. Yes, good. And another great way to expand your real estate portfolio is by smashing that like button. That really helps you out a lot. Om Patel is saying moving to Regina from India is a good decision from wholesaling point of view. Yes. So Regina is also, I know a few friends, I won't call them friends, but I know a few knowns that do wholesaling in Regina. So yes, you can wholesale still in Regina. And if you don't know how to wholesale, just look at my past videos. That's what I talked about. Joe is saying, do you ever have a hard time finding tenants, or is there plenty of people trying to rent in Winnipeg? Okay, Joe, that's a great question. And previously I even, okay, so great question. Is it hard to find tenants in Winnipeg? Short answer is no. There's a lot of demand here in Winnipeg. A lot of international people are moving all the way. A lot of people are moving to Winnipeg, whether that's from Toronto, whether that's from Vancouver. I see a lot of immigrant influx and overall population increasing in Winnipeg because one, the immigration laws are easier, so it's easier for international people to get a permanent residency and all that kind of stuff. So I've not had any issues with renting out properties, whether that's in the middle of winter or whether right now, which is the hot market. So to answer your question, it's not hard. All you need is good advertising. Maybe advertise it in Kijiji, advertise it in Facebook Marketplace. There's a bunch of other platforms as well, but I've not had an issue. Sherigan is saying best province for realtors. That is a totally subjective question. Really depends on where you want to live, and wherever you want to live, then you build out a business from that. A really great way to decide where you want to live is if you smash that like button. That really gives you a lot of insight on where you want to live. So if you're smashing that like button, you really get a lot of knowledge from it. So but just to answer your question, honestly, anywhere that you want, just decide where you want to live, get your realtor license, and start working there. It's all based on lifestyle. For sure, Rahul, I'll let him know. Ryan Kelly is saying I put 5% down on the first. Okay, so yeah, so usually 5% down, it's now it's not going to be available to you because you already used it. And now however, if you can put 5% down, you can put 10% down. So 10% down, that's what I did. However, my first property, I put 25% down because that was an investment property and I did a BRRRR. So in my second, which is my principal residence, I just put 10% down. I had the bank finance the rest of it. So yeah, you can just put 10% down if you have decent income and you are pre-approved from your mortgage advisor. Yeah, you can do that. Thanks for the smash that like answer one more. 1 second, I'm just gonna go through these. Nicholas is saying like buttons equals dreams come true. Exactly. So if you guys smash that like button, your dreams will come true. I can 101% definitely guarantee that. That's the beauty of the like button. It's just smashing that like button makes people's dreams come true, definitely. Sherigan is saying no hate, zero dislikes. I appreciate it. I'm just here to provide as much value as I can to you guys. Um, that's it. Rohit is saying, so that's where flipping comes, where you buy a lower rate, fix the issues, cash out at a greater price. That is right, Rohit. You got it. Any tips about flipping? To start flipping, I would say you need money. So you need, I would say, minimum anywhere from like $50,000 to $100,000. Depends on the market that you want to do it in. So get your money right and then start flipping. Rohit is saying smashing the like button from the past 6 months. Well, I appreciate that, my brother. Definitely, then your dreams will definitely be coming true. But on a serious note, I appreciate that. Joe is saying, thanks for the great answers. I will smash that like button if you do one more. Okay, let's see it. Do you have any knowledge of the Selkirk market? Oh, the Selkirk market, I wouldn't say I'm very specialized in the Selkirk market because I really know about the Winnipeg market, but I know there's a lot of so again, it comes down to immigration, and a lot of people that are moving from different provinces just to get their permanent residency here in Canada. So I know a lot of people are also moving to the Selkirk and Brandon areas because there you get they get more points for their immigration stuff. But in terms of real estate and home value wise, I would think it's still the same as in the entire Canadian market right now, which is really booming with everything. But those are my 2 cents on the Selkirk market. So hopefully now you're definitely smashing the like button. All right, let's continue. Manjo is saying, I love this comment. Instructions unclear. I smashed my laptop's display button. About to sue you. Hey, that's the commitment I'm looking for. That's the kind of commitment I'm building this community around. So just let me know, okay? Joe is saying, I'm going to smash it right now. I appreciate that. I appreciate that. And anyone who's watching this and hasn't subscribed to my channel, consider subscribing to my channel if you guys found any type of value in this live stream. Again, I really appreciate that. And let's continue. Om Patel is saying, who is Shark of Canada Real Estate? Who is Shark of Canada Real Estate? I don't really know. I was talking about maybe your question was about before about private hard money lenders and shark money lenders. So it's kind of the same thing. They also are called the shark lenders or private hard money lenders. So it's kind of the same thing. I think your question was around that. So if you guys don't have many more questions, I'm gonna start wrapping this thing up, or if you guys have your last questions, let me know in the comments and then I can answer your final questions. It's been almost 1 hour. I'm live streaming and giving you guys that money value. But yeah, so when I upload this, I'm gonna put in my comment in the pinned comment what kind of things I was talking about. So you guys, if you guys are rewatching this or you guys want to rewatch some parts of this live stream, you guys can do that. So I'm gonna leave that in the comment section down below. So again, if you guys want to rewatch this, make sure if you're rewatching this, if you guys could leave me a comment. I read all the comments that you guys leave me, so I really appreciate that, and I answer all of the comments that you guys leave me. So I'm gonna wrap this right now. It's been 1 hour. Thank you for amazing session. Thank you, Om, for tuning in. Thank you, everyone, to taking time out of your day and getting some value out of it. Sharing, thank you. Hopefully you guys some value. So that is it for today. That is it for today's live session. I'm gonna be uploading another video today, but obviously it's not gonna be a live stream. It's just gonna be a normal video. So it's gonna be out. I think what time? 10:30, 9 a.m. Tomorrow 9 a.m. in India is gonna be live, and I'll upload it today in Canada at 10:30 p.m. So stay tuned for that. Until next time, thank you guys. Thank you very much, guys, and I'll see you guys in the next live stream. Thank you.